Hi, guys, and welcome to Tickers from the Limitless Podcast. This is a series where we review listed companies on the Jamaica Stock Exchange. I'm Matthew.
And I'm Thaon.
And today we'll be talking about Scotia Group Jamaica, ticker as SGJ. But before we get into the video, we would love if you guys would subscribe if you're watching on YouTube. We're trying to get to 1,000 subscribers by the end of this year, 2024. Also, remember that you can follow us on your podcasting platform of choice. We're on Apple Podcasts, Spotify, all of them. It really means a lot to us. And without further ado, let's get into it.
Let's go.
So I think hopefully by the time this episode gets released, we did our episode on NCB. What was that, last week?
Yeah.
We recorded it. So hopefully, I think we'll probably release the NCB one first. And then we'll end up releasing the Scotia one maybe the week after, if anything. So I guess I think it'd be nice to, kind of compare to some of the different bank stocks. And also, let us drop a comment below, guys, which stock you'd like us to review next. And also, something I was even thinking about was maybe we could do a video where we kind of look into all the different financial companies. Imagine we're hey, which other financial companies, the NCB, the Scotia, the JMMB, the Sagicor, all of those ones, which one do we think could be the best? And it would be nice to see hey, what, are we right? Or which one do we think could perform better over the next year, 2 years, 3 years? And then we can actually look back and be hey, were we right? Why were we wrong? What could we have done differently and stuff? So drop a comment or a like if you guys think we should do that.
Today we're recording on the 29th of November. So yeah, just in case something wicked happens in that time period between now and when we actually release this episode. Here's the tickers on Scotia.
So I'm gonna pull up my Notion. You're a Scotia customer, right? I think Scotia is your main bank.
Yeah. My mom created my Scotia account when I was I don't know if I was a baby or so on, but I've had a Scotia account for as long as I can remember. I used to actually save money in. I'll never forget this because it was an envelope I got from Scotia when I was a kid, and I used to literally be saving $100, $50, and so on in that envelope and keep it in my drawer.
Piggy bank?
We had a piggy bank too, but that's for coins. This was for hard cash,
Oh yeah,
as a kid. And I was a miser. I was literally a miser as a kid. I would not spend money on myself. I wouldn't buy anything. Every holiday or Christmas or so on, if I get money.
Were you a miser or were you just broke? No, it's a legit question.
I mean, as a kid, you're not working, so are you?
Yeah.
What do you expect?
You're just broke.
No, there are kids that get money and they spend it.
Were you one of those
candy
kids?
No, I wouldn't buy anything as a kid. I would save a portion of my lunch money every single week. All right. I'd make sure to put down at least $100 or $50 in at least a week. Any coins would go in the piggy bank and so on. And that was the coins thing. That piggy bank was huge at the time. I remember it was a Scotia piggy bank too that used to.
I actually still have my. Well, I don't know if this was part of the original one. Let me show it. I don't know if it's. So this is actually it's not like a pig. It's a beer bank.
Yeah, I had that. Is that from Scotia?
No, well, is it?
It's blue. I doubt it's from Scotia, but I had one similar. Yeah, that's Team Blue. But
the NCB zone?
I don't know. Doubt it. But I had one that looked just like that. It looked like a bear with a red top. I'm pretty sure it was from Scotia, and you drop the coins in that red top. I'll never forget it, bro. But yeah, it was cool having that bank account because it's the same bank account I use to this day. Right. So yeah, I've been a Scotia customer all my life.
Actually funny, I'm thinking I should probably, because I actually have coins in this, I should probably do something actually count it up or something.
Anytime I get a lot of coins though, I sell it to somebody and I give them a percentage. So if
I'll
give them 10% of the value of all the coins or so on, and they just give me hard cash and they'll deal with the coins and so on.
You're giving them a discount, you're saying?
Yeah. So I'll have the coins, and I actually let them count it up and then show me, and then I said, all right, you can just buy this from me. And basically give them a discount.
Okay.
Yeah, just to get rid of the coins.
Cool.
Yeah.
But yeah, let me share my screen.
Scotia is a good stock. So I'm excited to talk about this. Because I'm not a big fan of the financial companies. But especially now, I mean, post-COVID, the financial companies have been trading at high PEs, and but Scotia is definitely one of those companies that have been performing well post-pandemic. So let's get into it. Let me not stop you, bro.
Yeah. So in our usual tick-off format, we go through how does the company make money, what's going on around the company, what are some of the plans of the company, how is it owned, how has it been trading. So Scotia Group Jamaica, it's a group of companies, so it's not just Scotia. They are big in banking, but they also do investment management, and then they also are in insurance. So in terms of the banking arms, they do, retail banking. So that's just like what Thaon was talking about, where he has a bank account with ScotiaBank and he'll deposit his money and they will, collect it. And then if he needs some of the money, he can withdraw the money. So you can have like a savings account, checking account, debit card, credit card, all of that stuff. They also do like commercial or like more business, corporate banking or business banking. So offer business solutions to like clients. So if you're a bank or say you own a business and you want to get a loan, you can, for example, get a loan from even just retail too. So they offer loans, for example, to like they could give you a loan. They could give a business a loan if you say you want to start a business. They could say, hey, we'll lend you this amount of money at this interest rate, and you can buy, say you want to start a farm, chicken farm or whatever. I know you're always saying you want to go into farming, so that could maybe Scotia could be someone you could go to. So yeah, that's kind of the different banking and stuff like that. I feel like most Jamaicans have probably heard about them, because in terms of like the banking in Jamaica, the two big ones are really them, the Blues and the Reds. So NCB would be the blue bank, Scotia would be the red bank. They also do like different investment management and stuff. So you can go to Scotia and say, hey, I want you to manage some money for me, invest it in different stocks, bonds. I want you to manage my pension. Or say there's even companies that, say you are a business and you want to list on the Jamaica Stock Exchange, or you want to do some deal where you end up possibly buying into another company or something like that, they can do that for your business. So they do things like unit trusts, pensions, as I said. Some of the companies I think they actually brought Fontana to market. For like Fontana Pharmacy, I think they were the ones that actually did their IPO. And I think they also were one of the arrangers for Cygnus Real Estate Finance.
Interesting.
For bringing them to the market, yeah. So they're not as big as, like, for example, well, in terms of, I guess, like IPO, as like a Mayberry or a NCB or a Grace Kennedy. Like Grace will brought like what Spur Tree, Jamaica fiberglass producers, but they are, still in that space, And they also are in the insurance business, not as heavy, I'd say, in the insurance business. They seem to be more like a banking, they're more like heavy in the bank. So I know that they're in both general and life insurance. So, for example, the general insurance, the Scotia General Insurance, I think it's Scotia General Insurance Agency. But I think that they actually have it's a partnership that they have with Grace Kennedy General Insurance. So it's like you could go to Scotia, say, hey, I'm guessing like you say you have like a bank account with Scotia, you have a credit card with Scotia, and then they're like, hey, would you be interested in insurance? Because maybe the type of person who has a bank account, has credit cards, and has other stuff, they're like, yeah, I'd be interested in some, types of insurance with you guys. They can offer that, but it's more, they are the broker and they're not the one actually providing the insurance to you. Grace Kennedy's general insurance arm is the one actually providing the insurance and taking on the risk. But they I think just get they essentially worked out like a deal with Grace, and they will get a cut of that money. So they aren't the one actually writing insurance or taking on the risk. They just help, I guess, broker that transaction. And they are also in like the life insurance space. So I had this was on their website. Let me see. Yeah, so these are some of the products here. So it's Scotia Criticare. Also, so I guess the critical care insurance, Affirm Insurance means investment, Affirm Universal Life. So they have like a universal life policy, investment potential, accidental death and dismemberment, things like that. Yeah, so they have, they offer different types of insurance products, banking products. Yeah, so that's a bit on some of the money that they make. I think I actually did a breakdown in terms of the, like, how much of the money. Let me see. So yeah, I did this was from their financial year isn't like the typical, I guess, end of December financial year. Theirs is October. So this is for the financials of October 2023. And they actually give a breakdown. So they have what they call treasury, retail banking, corporate and commercial banking. So I'll group that in terms of just banking. And when I worked out the amount of, a percentage of the profit before tax, that's about 70, I'll just call that basically 80% of their money comes from some sort of like banking. So that's why I said they are more like a bank stock versus like a NCB, which is more like an insurance stock. No, that also is big in banking. So I'd say Scotia is more like focused on the banking side. But they do offer like insurance and investment management. So I found that insurance is about, I think, 15% of the profit before tax for that financial year, and then investment management was about 7%. So there are more on that banking side. Yeah. So yeah, that's a bit about how, the different arms of money that they have in terms of what is going on around the company. So I think that, the Bank of Jamaica is really they control they control money, or they control the monetary policy in Jamaica. So every country usually has its own central bank. So our central bank in Jamaica is the Bank of Jamaica. The US has their own central bank that's known as like the Fed. Some of the things I think I'm seeing with the Bank of Jamaica that I think will affect all of the different, bank companies. So they will affect the NCB, the Scotia, JMB, Sagicor, all of them that have banks, both the listed and unlisted ones. The Bank of Jamaica is working on this thing called a switch tool, where what they're saying is that right now, I'm sure if any Jamaican has set up a bank account, a lot of times it can take a while, because you could go into the branch. It's actually funny. I actually set up a Scotia account a few months ago. My first Scotia account. I remember when
Congratulations. Is the grass green on the other side?
So I haven't really been using it that heavily. So I need to actually fill out the form to work on getting a credit card with them. Okay. But I mean, the app seems decent so far. One of the things that so I call them, I think I call them or email them, because like, hey, could I just, like, it's 2024, can I, set it up online? And they're like, no, you can't set it up online. I was like, dang, I'm gonna have to go inside. And then, I think it was a day I had work, and I was like, okay, what I'll do, I'll go in the morning, and then hopefully, by a certain time I can maybe go back to work or whatever. And it took quite a long time. Like, it took hours just to set up, even though I had all the documents that I needed in advance. They told me, okay, you need this, that. I had it all printed off, or I had it, I think, all on my phone. And then I was like, okay, just give me an email, I'll send it to you, or whatever. still took a really long time because it was just like packed. I went to the Ligani branch. It was hours. It was like my phone almost died actually because of how long it took.
Yeah.
It was actually, so essentially we know that that's an issue. And we also know that, sometimes maybe one bank, it's like they could give you a better, say you need a loan, like a car loan or some other unsecured loan or something like that.
Yeah.
One bank could say, okay, I'm going to give you 10% interest rate. But if the car costs, if the loan was, you're borrowing $1 million, that means you're paying 10% of that, or $100,000 extra in interest or whatever per year. But then what if another bank is like, instead of 10%, I could give you a cheaper rate at 8%. And so even though you could save money maybe on that, and if you do like a calculator, you could probably save a lot of money over time, especially if it was a really long loan, like a 5-year loan or a 10-year loan or something. Maybe it was even like a mortgage. Mortgages are pretty long, like probably at least like 30 years, 40 years sometimes.
Yeah.
So that the difference between like a 10% loan and a 12% loan can kind of add up. So say you're starting at that bank with a 12% loan, and then this bank is saying, hey, we could actually give you a cheaper rate, why don't you switch to us? You could start the loan with us and switch over the loan with us, and then we will lend you the money. You can refinance the loan, pay off those people, and then now you can do our loan with us. But one of the things that I guess is a hindrance to that is because, for example, the process of setting up the account and sometimes just the process of switching a bank and stuff can take a while. So what I think the Bank of Jamaica is doing, they've realized this, and they are trying to make a tool that will allow you to
be a wagonist.
more essentially a bank wagonist. So you can more easily switch banks, because instead of you having to like give all of the different information and print off a passport or driver's license, pay slips, this, whatever those, what they call, like those documents would be what you call KYC or like know your customer. They are saying, hey, if the Bank of Jamaica, we are we're the like top bank. We lead the other banks, and we tell them, kind of what to do in certain regards. If we could store the information in our central database that's secure, well, I really, really hope it's secure. So they have that central database with that information. So if you're with Scotia now and you say, yo, I want to switch to NCB, instead of you having to give all that information to NCB could say, hey, Bank of Jamaica, we want to get this guy's information. We have this document he signed saying he's willing to disclose it. Give us the data so that we can easily set up his account. So that's, I think, what they are hoping, or that's my understanding of what they're hoping to have. And I saw like the governor, Mr. Richard Biles, was talking about it. I think they were targeting, there was an article that came out May 2024, and they were saying they'd hope to take 18 to 24 months. So that put them maybe November 2025 or May 2026. But I mean, always factor in a grain of salt with that.
Yeah.
But I think that's something that could be kind of interesting, because it could work out better for us, the consumer, as well, by like hoping that they properly store the data. But it could make it so that the banks can kind of be more competitive, because maybe you could be more easily, maybe could even use that as a bargaining tool. So say you're with a bank now, one of the banks is giving you 12% on a loan, another bank is saying 10%. You could say, hey, I'm actually meant to switch, and it could be very easy to switch. But then they can say, okay, wait, we'll give you a lower rate. I don't know. But I was thinking about that still. So I'm going to look out for that. I know that, interest rates, tying back into a point we're saying about like the Bank of Jamaica, the whole interest rate thing is that the Bank of Jamaica essentially controls interest rates. All the other banks can essentially, what would you say?
How I understand it is these other banks, so it's like the central bank or BOJ has an interest rate, right? Let's say, for argument's sake, it's 5%. Meaning, if I'm a bank like Scotia or some other bank, I can lend money to the BOJ and collect interest of 5% on the amount that I lend, right? So they kind of dictate just the interest rates of all these other banks and so on. So the banks themselves, if they are to give you, Preston, a loan, and their loan wouldn't be 5% because the quote unquote risk-free loan is 5%.
Which would be the Bank of Jamaica.
Which would be the Bank of
generally saying the
Jamaica.
government is one of the lowest. Yeah, the government of that country is generally one of our lower
risk.
I mean, everything will have risk, but it's essentially almost like, okay, this is one of the lowest risks you can get.
Yeah, because the thing is, if the Bank of Jamaica can't pay you back, all they do is raise taxes on everybody. The government just raises taxes. Or they print money and they pay you back. Yeah, exactly. Right? So that's why they call it risk-free or so on, quote unquote. So once the central bank starts to increase interest rates, right, all these other banks also will increase their what I call should. There's should. And it would make sense for them too, because if I can lend to the BOJ at 5%, and I currently lend at 10% to Preston for a loan or to anybody, right, for an unsecured loan. Now, if the central bank or BOJ is raising the rate to 7%, for argument's sake, right? That's what, and I remember we did an episode with Kirk. He called that the net interest margin, basically that difference between what you can lend to the central bank, because it's more. If the central bank is raising their rates and this is risk free, why would I lend to you, Preston, at 10%?
Unless you're giving me more money.
Yeah, I can either lend more. Apple does that, but I can either lend more of my funds to the BOJ because it's risk free and it's higher interest rate. It's from 5 to 7%, or I could just increase what I'm lending you to maybe like a 14% because I used to give you 10, but BOJ is risk free and they're giving me at 7, so I might as well increase the interest rate to you because you're risky at like 14. So that's kind of what happened in like post COVID, where the interest rate started to people just say, oh, high interest rate environment and so on. That's really why all these people's interest rates went up. So mortgages, car loans, all of those things. Even my car loan went up because it's a variable rate loan, but not by much, which was great. But yeah, so that's how that works. That's how I see it. Yeah.
Yeah. So essentially, because the Bank of Jamaica raised interest rates, then that meant that eventually the other banks would start to raise their rates. So say you are someone who you are looking to get a car because you want a car, you want to drive to work, you want to do whatever, but when you look at your budgets, your salary, you don't, and you can't buy it cash. So you're like, okay, I want to get a loan, but then suppose the kind of car you'd want right now, because the interest rates, say when car loan rates were 10%, you could afford the car that you wanted, but then now that car loans are now say 15% or 20%, you no longer can afford that car. Is that you get a different car, but suppose you're like, no, I don't want to wait. I only want this specific car. Okay, what I'll do is wait until I have more money or until my situation changes or interest rates drop. So the bank, for example, ScotiaBank, or the other bank, the Blue Bank, NCB, that could be business that they could miss out on, because if they're like, hey, we want to lend you money so that we can make money, but then people aren't going to be coming to them as much, possibly because the loans are essentially more expensive, and so that can dissuade people from getting a loan, and then that can make them report less money from that. So that's one of the things that can happen from that. So if interest rates trend down, and
which is what we're seeing right now, they're starting to trend down very slowly.
I think the Bank of Jamaica has done 3 cuts, small cuts, I think like 0.25%. Or what they say, 25 basis points.
25 basis points. Yeah, bro. All the fancy terms. As doctors, we don't really care about that still. We just want to see it in our pockets. Like, how is that going to affect me? But yeah, hopefully I think you're gonna say that hopefully the banks' interest rates will also follow suit and start to fall. But they don't have to. They could still keep it high up. And a conversation we're having with I guess that we haven't even dropped the episode yet, but we'll see that impact sometime next year. Yeah, so it's delayed. It's usually a delayed reaction because it's like, which one of us is gonna cut the rates first? Which one of us is gonna offer cheaper rates? So yeah.
So because I was even seeing there was an article, was it this week that I saw, where the Governor General Richard Biles was talking about, like, because what the central bank wants, Bank of Jamaica, they want, when they say, okay, we're gonna start cutting rates, you guys should cut rates on your loans, right? They want it to happen somewhat not too long after they do it, because that's what the Bank of Jamaica wants. But the banks don't necessarily want it, because if they can get money cheaper, so say they're borrowing at 5%, but then they're earning at 15%. There's a 10% spread on that. So, but then suppose they're now borrowing at 3%, or what if they're borrowing like there's more, the spread increases, and that can be more profit for them. So they aren't necessarily incentivized as much to cut, because that could mean less money. The bank could say, hey, we're going to get less money or less profit. So they don't necessarily want to switch it very fast. So I'm trying to find the article. I don't know if I sent it to
what I saw today though, before you get into the article, I saw also a Gleaner article. I'm trying to find my bridging. Let's say, big up, let's say, he sent it, and I think inflation is at 0%. I'm gonna see if I can send it so we can share it. But yeah.
Well, I found the article I was talking about. So there's this Observer article titled "Bank of Jamaica or BOJ on the prowl. Central bank warns it will be taking steps to ensure interest rate cuts are passed on." This was November 27th, 2024. You can see the Governor of the Bank of Jamaica here, Richard Biles. There was a part in it where he said, where is it? So he said, we are absolutely determined that we have to have a much more efficient transmission system, which is that where we're talking about how when the Bank of Jamaica does something and tells the other banks to do something, they want them to do it fast. He said the transmission system is a method through which central banks influence demand in the economy through the monetary policy. And he says typically a central bank fighting inflation will hike interest rates with the hope that commercial banks borrowing from it at higher rates will, when they add their own margins, create a disincentive for consumers and businesses to borrow. But throughout its rate hiking cycle, banks largely ignored the central bank's signal rates, which impeded its efforts to reduce inflation quickly. And the Bank of Jamaica does not want that to happen again, as it reduces rates now, and even said that it is considering several measures to prod them into responding how they want to respond to movements in the policy rate. Prod them. He said, we are not just watching them, but also we are working on methods to improve that system for sure. There was even a line that he said, he's like, trying to find it. Yeah, so he said, so while that is coming along, that's good for the real. It's creating more competition. But he says, but in the meantime, there are other measures that we are looking at, which we can't discuss at this point, but I can assure you, we take that bit of efficiency very seriously.
That bit of inefficiency. Yeah.
Sorry, inefficiency very seriously, and it has to be remedied.
So it sounds like they really want, I guess, a tighter control. Because those things can take time. Like, imagine inflation's getting out of hand. You as the central bank trying to raise interest rates, and it takes maybe a year or 6 months or so on for other banks to start raising interest rates. I think they want it to be quicker so that they nip whatever problem it is in the bud much quicker.
I think it will happen with more competition, because I guess if you compare us to maybe some maybe larger countries probably have a lot more banks versus us. It's not just, well, I guess it's not even just the amount of banks. I think I found something that was showing that I think, so this was an article that was saying that, I don't know how true this is, but it was saying that Scotia and NCB are about 60% of all bank accounts. This article from May, and there are about 11 players. So if that's true, you notice essentially though NCB and Scotia, they're the majority of banks, like in terms of controlling the majority of deposits, then it's what they kind of says. So it's really Bank of Jamaica, when they're saying that they want to get it under control, I think it's more saying, hey, we need Scotia and NCB to listen to us because they're the largest banks,
Which is funny because if you make it easy to switch, right, and others aren't listening, imagine somebody else has a better rate. This 60% could go down. Like they could have, the competition really could impact that. And in a capitalist society, competition is great, right? Because you can look for deals elsewhere and so on. They're more incentivized to do it right by the customer, because if the customer can switch banks easily. I mean, look at that. In the last episode, we were talking about the NCB Uber issue. I can't even imagine how many people have probably sought after another bank account. Imagine if it was 10 times easier to get a new bank account. People would leave. People would flock and leave NCB and probably join Scotia or whichever other bank is available. So the things you have in terms of even Scotia, we're talking about Scotia now. Like I think their app is game changing. Like it's clean, it's user friendly. You can unlock it with face ID, or so you don't need a token, right? That can take ages. I've had to use an NCB account actually. I remember my dad has an NCB account, and that token situation, headache, right? So it's just so much easier to the transactions online. You can schedule transactions. So at the end of the month, I know that certain things are coming up to go to different accounts and so on. Like paying off your credit, all of those things are just, it's so seamless. So that's, I think, one of the things Scotia has going for it, because they were closing down a bunch of branches too. I don't know if you remember that a couple of years ago. They closed down a few physical branches and so on because they were doubling down on the whole online platform and so on, which where the world's going. So I think that's why their app and so on is so good. And they have, every time you look in the app too, it's cool because they said more features are coming with different parts. So you can have Scotia Insurance. I don't really have my insurance at Scotia, but Scotia Insurance part of the app is being built out, credit cards is already built out, billing, all of those different things. So yeah, like it's pretty good. And I hope other banks are taking note, because this is what I would say first world kind of experience looks like in terms of apps. So yeah.
Yeah. And one of the things I want to talk about, so there is an asset tax that a lot of the banks in Jamaica have to pay. Essentially, it's like you pay, the asset tax is 0.25% of the total assets that you own. And what I saw was that it was supposed to be reduced, or essentially halved, from the 0.25% to 0.125% from 2020. But then because COVID had hit, the government essentially had wanted, some money and stuff. Because that asset tax, if you measure, like, think of the amount of assets some of these banks owns, billions and billions of dollars, whatever. So that would have been a good time to have that, especially when there was a lot of uncertainty going around that time. And so I am wondering if we're recording 2024, so that's basically 4 years later. If the government were to reduce the asset tax, so I don't know if they would reduce it from the same amount they were saying before, they'd essentially half it. That could be a lot of money that, these banks and stuff that they had to pay out to tax. They no longer have to pay out to tax. They could, do other stuff with it. They could pay more dividends. They could buy some other businesses, invest it in other arms, like invest in the stock market, and all kind of different stuff. They could do whatever they want with it, you know. So that's another thing I'd want to see if I guess we could look into the budget coming up for, when is it usually, around March or so? We're recording this like end of 2024, so early 2025. And so yeah, that would be something to look forward to, because events just like it would affect a lot of the other banks or a lot of the other financial companies. If they no longer have to pay that asset tax, that's a lot more money that can possibly be freed up for them to do stuff with. And yeah, that's some of the stuff going on around the company. In terms of some of the plans, so I saw them speaking about different tech upgrades. So I guess you mentioned the app. They already have a pretty decent app. There was something where I saw that they were actually pushing to allow you to have things like Apple Pay and Samsung Pay. So I know that this is more popular in, like, you know, the United States, where my understanding is, instead of you have never used it, but instead of you having to like take out your card, and, you know, I guess more nowadays, more cards are tap and go. Like, I don't know if your card is tap.
Yeah.
So instead of you having to just tap the card, you could keep your card in your wallet, and you could actually use your phone, because sometimes people, their card could be in their wallet or their purse, but their phone is in their hand. And so to be able to buy the thing easier, if you're going to the supermarkets, going to a fast food place or a restaurant or whatever, you could just tap your phone on the card machine, and it could just do the transaction through that. So I guess it makes sense for Apple and Samsung, because they get a cut off of that. But that's something that I think Scotia is working on. So I think they're actually, there was an article I was reading September, I gleaned an article that was saying that I think Scotia is testing it internally, and then they're hoping to have it available to the public by 2025. Initially, that'd be Apple Pay first, and then Samsung Pay after.
That would be so
that'd be
cool.
Kind of cool.
Yeah, wouldn't have to travel with your card or anything like that. You just everything's on your phone. It's giving WeChat in China. You know what's cool though? NCB offers this. Like, they have their card on. I think they have a credit card option. My friend was telling me about this. Her name's Anisha. She was saying she works at NCB. Might as well just plug it here. But she was saying, and she showed me that it's like a virtual card, and you just use your phone and you tap it same way and those kind of stuff. And I was just like, what? This is in Jamaica? It's like, yeah, but
so need to
nobody knows about that.
Oh, as in it's being internally tested? No,
as in it's rolled out, and apparently it's been rolled out for a long time. I just don't see it. I feel like they're not pushing it, like marketing it. Because if I have to find this out from somebody that actually works at NCB, that's not that, you know. I feel like everybody, if you have a an NCB credit card, you should be doing that. You should just have it on your phone as well. Why not? Yeah, and I know how it works, because I think with even Apple Pay and so on, it's NFC. So you just use NFC, and then it will ask you some form of authentication. So whether it's Face ID, whether it's
fingerprint,
fingerprint, whatever biometrics that they want. Yeah.
Okay.
Yeah.
Okay, nice.
Would be cool to see.
Yeah. So I think they're working on like upgrading their tech. And then I saw, there was an article I was reading about that you can now open an account without having to go in branch. So I guess I caught this, I wish I had known about this before, I wish this had been implemented when I was opening up the account. So this was an article from Loop of October 14, 2024. New customers can now open a ScotiaBank account online. I think I haven't tried it, but I think that's pretty nice, because if I even see, they say currently residents in the Bahamas, Jamaica, Cayman, Barbados, Turks, Trinidad will have access to the new ScotiaBank onboarding process. So I think that's big. I'd like to see if something like NCB offers that. I definitely think that, that's something that is like, it's 2024, guys. You should not have to go into branch you
Yeah.
shouldn't have to spend hours, like 4 hours, 3 hours waiting in a line and whatever just
Yeah.
to open up an account,
It's literally the
Because
antithesis of
they can't they save
productivity.
money from that. I think it could be it can work out more efficient than them because you could maybe do a lot of that through a computer. So
No
you
paper.
don't have to then hire, there's the paper, like you have to handle the paper, store the paper, protect the paper, dispose of it. Person has to sign it up, sometimes get JP to do this, whatever. But if you can do a lot of that online and make a computer maybe recognize that, doesn't that save money for you, the business? So that's an incentive for you. You could probably
Exactly.
handle it, process much more accounts faster. And then also, I don't know if NCB does it, but if, for example, Scotia is one of the big ones in Jamaica that does that, then that means any new banking person could be, if they don't want to go into branch, they could say, oh, wait, I can just go to Scotiabank. That's another incentive to go to Scotiabank.
Yeah.
So what if Scotiabank is giving you a better interest rate or better this, better product, better credit card, whatever, and then you don't have to go into branch? That's just another reason why. So I think it's nice to make the product more appealing.
Yeah, and I think about even people that, I don't know how hard it would be for non-residents, but when I think about people that open up accounts, it's parents that have kids, right? Meaning new accounts, people, existing clients of other banks and so on, but like even foreign nationals that come to Jamaica. Like, remember in med school, I don't know how many foreigner friends you had, but I had quite a few from Trinidad. From Trinidad, and their bank account was Scotia because they knew of Scotia from, being in Trinidad and so on. So they would just create a Scotia account. But imagine now that's so seamless and it's online. They don't even have to leave their dorm rooms to just submit all their documents online, and boom, the next day they have a Scotia account or so on. So I think making that seamless also would help for regular Jamaicans as well, because the government has been talking about how much of the population doesn't have a bank account, the unbanked, and they can't capture the unbanked and so on. But if everything is online, I mean, most people have a smartphone. So if you make that process super, super easy, you'll see a rise in bank accounts, right? And of course, because Scotia makes what you said, 70% of its profits from banking, profits must go up. So yeah.
So that's some of the things I see them talking about working on tech. One of the things I was even considering, they haven't said this, but when I was looking at because you mentioned for example, Scotia is more than just Scotia Jamaica. So we're talking about Scotia, the listed company, the group of companies, but there's Scotia in other countries. There's Scotia in Canada. That's where they're based. And then they own Scotia Caribbean. They own they're in a lot of other countries. And I'm noticing that that Scotia parent company has been selling off different pieces of their business to other people. So for example, they sold different aspects of the business to Grace Kennedy between 2021 2022. So there was a Scotia Insurance Caribbean Limited, which was in some of the countries like Barbados, Belize, Cayman, Turks. Grace Kennedy bought from that Scotia. And then there's Scotia Insurance Eastern Caribbean Limited, which was other countries like Anguilla, Antigua, Barbuda, Dominica. So they did insurance products and stuff in there. Grace Kennedy bought that arm too. And then they even Scotia sold some of their banks in some of the other countries, Anguilla, Dominica, Grenada, St. Kitts, to this company, Republic Financial Holdings, which is a Trini company. And at one point, they were actually hoping to sell some of Scotia was going to sell its insurance operations in Jamaica to Sagicor. I saw that in 2018, but then the deal fell through. I don't know exactly what happened. So I'm noticing that a lot of different arms of Scotia are essentially, being sold. So I was
actually
even
thought they would
wondering,
leave Jamaica.
Yeah, I don't know. Are they considering selling, Scotia Group Jamaica? I don't know. I don't know if they get the right
Strange
price.
to me. Yeah, I mean, I feel like a lot of investors, I mean, even Gary Peart said it on when he when he answered one of our questions, for the right price, they would sell SPL. I think it's the same for the parent company. For the right price, they'd probably sell Scotia. And I also remember, was it Berry who made that tweet, Chris Berry, about who do you think is going to buy one of these banks? And they said, what, Scotia, JMMB or so. I don't remember if you know
No, I
that
think he
tweet?
was saying like Grace.
Or was it a
Well,
consolidation? Grace.
no,
Yeah,
he was saying Grace.
buying
Like
a
he was
bank.
saying Grace Kennedy. I did an episode on Grace. I don't know if that'll be out before this one. He was saying that Grace Kennedy, they have a bank which is First Global, but First Global is really small in terms of like Jamaican operations and stuff. But then Grace is a big company, and he's like, okay, if Grace really wants to push into banking, probably need a bigger bank. So would they possibly buy Scotia? I think that was kind of what it was.
Yeah, he said, would they buy Scotia, JMMB, or was it NCB? I don't remember. But I just found that funny because at the time, I saw Scotia closing a lot of they're closing a lot of branches, and they were exiting, although selling some of those branches that you were saying in those different Caribbean islands. So at that point, I was just like, would they be willing to exit Jamaica, even though Jamaica is so profitable? Similar to the same thing with me and you. I think we spoke about Carib Cement exiting other Caribbean islands, even though they are profitable in like Damrock, etc.
Cimex.
Yes, Cimex selling the subsidiaries and so on. So it's just, even if the company is profitable and printing money, we never really know what the parent company, their goals are, or so on. So it's possible.
Yeah, because I just realized Caymans, we're saying Scotia, but it's really BNS or Bank of Nova Scotia, and then Nova Scotia is in Canada. So it's Bank of Nova Scotia, which is Canada. So they're actually a listed company on the Trinidad Stock Exchange. I'm showing their stock price. Our recording today is about $80, and they are the largest shareholder in Scotia Group Jamaica. I saw something from I think there's their financials. They actually tell you like how much of their revenue comes from the different areas. So for example, let me show this. This is about 50% of their, or is this? No, this is profits. Half of their profits comes from Canada. And then other third, like 28% is the Pacific Alliance. 11% is United States, and then Caribbean and Central America is about 9%. So it is, and Jamaica is a big portion of that 9%. But I don't know. Once again, I think for the right price, they might be willing to sell. I don't know. That'd be interesting because if they were to sell, they could trigger a takeover bid. I'd wonder if the person buying them would even want to delist the company or just keep it listed. Would they want to take the company private? I don't know.
Imagine if GK buys them, and that's them. Imagine putting it now, like their financial company, under SGJ, and probably renaming it and all of that kind of stuff. But I could see them doing that and still keeping it listed. It's possible. Scotia Caribbean Holdings Limited is the parent company.
Yeah, so that's the largest shareholder in, well, on time recording, that's 72% of the company. At the current price of about $45, that's valued billion. At 100 billion Jamaican.
Yeah.
Yeah, no, I don't know. Like that'd be pretty interesting. If they buy this, the interest part is, what if they buy it even above market price? So what if they say you'll take over bid $50, $60?
Yeah. I could see that. I could see it. Because Scotia for me it's just, there's still so much more that they can go into. You're talking about even insurance. There's just a tiny piece of the insurance pie.
I don't know. It doesn't seem like they want to push into insurance though. Insurance, because the fact that they were meant to sell off their insurance arm a few years ago, and they've been selling off other insurance arms. To me, it sounds like they don't really want. Maybe they're like, hey, we don't really want to compete with the big dogs in the insurance space, the Guardian, the Sagicor. That we want to like focus maybe on what we think could do better, which is banking. So I wouldn't necessarily think that
I'm not so
that would
sure
have been my
still enough.
first.
Because remember, all right, I guess, for those who don't know, but I guess the audience, I don't think we've said this on the podcast before, but Scotia has sponsored us once for an event we did with Limitless, right? And in that, and speaking to some of the people in that team, it sounded like insurance was pretty bullish. Like they wanted, the reason we got it was pretty bullish. You get me? And so on. And even when I talked
Yeah,
to a
but
couple
hold
of,
on.
no,
How you?
outside of that, hold on. Before, I know the point you're gonna make, but even outside of the people that were on that team specifically, when I spoke to other employees of Scotia that have nothing to do with that team, it
Did you
does
speak to
sound
Scotia
like
Caribbean Holdings?
no, but
But
did
they're the shareholder who would sell. So those are the people you need to talk to. No matter if little Jamaican youth who is, yeah, he's big in the little space there, but remember you have to look at the parent company because they're the ones who would sell. They're the ones
I
who would,
guess.
I think, direct the company. So it's really them. And I was trying to say that, for those people, like you're talking to the people who, how they make our money. They earn commission off of writing the insurance. So they'd be
Yeah.
like, yeah, man, insurance, man, yes. I'm not saying there's nothing, like insurance is good. And definitely once you, understand what you're buying and stuff, always have to understand what you're buying. But, yeah, I don't know.
Insurance is a
It
pillow,
would be
for
like
sure.
a complete turnaround though. It'd be a complete turnaround. Like you are going to sell you're selling your different insurance businesses all across the Caribbean. So it said they sold a bunch of them to Grace. They're going to sell their Jamaican insurance business, which is really more, come to realizing that the Jamaican insurance business, which said, well, Jamaica General Insurance is really GK doing the insurance itself. It's just Scotia is marketing it, like saying, hey, you can come to write with us, but we're not the ones really providing with the insurance. It's really Grace. So to me, it shows that, hey, insurance isn't really that big for them. I don't know.
Grace, I don't know, because even when we're still thinking about Grace wanting a piece of the pie and Grace doing mergers and acquisitions, I could still see them going for Scotia. Not necessarily just for their insurance, but just in general, like all the things that Scotia has to offer. I still see it a part of the 2030 vision for Grace. So I don't know, man. I don't know. If Grace comes with the right price, I feel like they could buy Scotia. Scotia is so profitable. I don't think we've gone truly into how profitable they are, but in terms of banks that have been performing, and I know you're gonna go into the financials right now, but they've been performing. Okay, I guess you're sharing your screen. You want to talk about the numbers?
Yeah. So I think, well, this is up to October 2023 that I had done in the Excel. So the Scotia Group Jamaica made 53 billion in revenue, and they did 17 billion in profit. That's a 32% profit margin. At the time, I was comparing to NCB's September 2023 results, which they did about 7 billion. But I think they've released I've reported since, which was done better and stuff. Versus like Sagicor, their financial December 2023, they did 14 billion in profits. JMB did about 7 billion in profit. So they were, at this time, they were the most profitable. And that's a pretty high profit margin. So 32%. And at the time we're recording, the stock is about $45. On the earnings that spoke about before, that's about a PE of 8. That's actually pretty low. But I mean, this is a financial stock.
I mean, look at the other financial stocks and their PEs.
Well, the thing is, the NCB one, this isn't
only one you can compare it to is.
No, I'm saying the NCB one is lower now because this is.
Oh, because of the APO.
No, because they added in. This is the financial I'm showing are the September 2023, but they released.
Yeah.
Yeah.
I remember. Yeah. But I mean, NCB's PE, I probably even just find it.
NCB's I found it 8.81. So their PE is actually closer to Scotia's now with that. Yeah, it's actually funny how NCB and Scotia are like a similar a lot of financial stocks are kind of approaching each other in terms of price. So I guess except JMB, but like the Scotia, NCB, Sagicor, it's funny. NCB's coming from like $200, no
Yeah.
$50. Wow.
Yeah. And I mean, the two other companies that have done APOs are NCB and JMB. Yes. When you look at those PEs that are small, I don't know.
Yeah.
Scotia just look. I don't know. To me, I mean, it's a way more profitable company, low PE. They pay dividends too, don't they? They pay some.
Yeah.
I don't remember how often they pay, but I think it's twice a year. But I know they pay dividends.
How much did they pay in the? I'm trying to say how much they paid in their most recent. So this report I'm looking at is what? Which period is this? This is the July up to July 2024. How much did they pay out in dividends? So they paid out, dividends paid, oops, it was right there. Yeah, dividends paid for 2024 financials. They paid about 3.7 billion in dividends. Compared to last year, they paid about 2.9, or they call it 3. So they're increasing their dividends. I think is it like almost quarter there or so? But yeah, I mean, Scotia, what I'd say is that if, I should check how they're doing so far this year compared to
This year they've been
last
doing
year.
pretty well.
So they're tracking ahead of last year? Let me see.
This is in terms of what, profitability?
Yeah, profit is, they did this July 2024. Is this their first? No, this is their quarter 3. So the first 9 months of their financial year, they did just about 14 billion in profits. Compared to July 2023, that period, they did better. So they did about 14 billion versus last year about 12.5 billion. So yeah, they're tracking ahead. I mean, let me see. I mean, when I think about Scotia, it's like, as I said, they're big in the banking space. It's not like they're gonna just disappear. You can't just disappear like that. I know that I know people really like their credit cards. And you mentioned, I've heard people talk about the app before. I mean, if interest rates continue to trend down, that could make them, maybe more people may say, hey, I want to get this loan. They could choose other banks, but maybe they're like, hey, because Scotia has some of the offerings that were said, maybe they have a good credit card. You can set up the account online. You can do Apple Pay, other stuff that could encourage people to, hey, continue to pick Scotia as their bank. Then maybe if the Bank of Jamaica switch tool comes into play that we spoke about, if Scotia makes a pretty good product, they could maybe try to steal some market share from those other banks. Yeah, I mean, I don't, what's, let me see in terms of valuation. So the stock right now is trading at, let's see,
40, close at $44 today.
So on the
80.
Yeah, hold on. So based on the 2023 earnings, I did projected earnings for them. Yeah. So let's do this in a title. Yes. So based on 2023, their financial year, which I said ends when again? October. Yeah. So October. So yeah, it's ended now. Like we're just, I guess, waiting for their next report to drop. If they continue along, so I was saying 2023, they did really good year for them compared to 2022. Because for 2022, they did 10.3 billion in profits versus 2023, they did 17 billion. So profits went up by over 50%, basically like 70%. Big increase. I like that. So far, what they've tracked for the first 9 months of their financial year 2024, if they continue along this trend, they still could beat out last year. Not as big an increase. I mean, it's just the size, I guess, of the company, because like it's already so big, it's like it's harder to grow. They could actually be doing about almost 19 billion in profits. Right now, they're trading, let me see, we said they're like $45 now. they're trading at around 8 times earnings based on the 2023. So if they do the track that we said, PE doesn't even drop that much. So no, it's not as, I mean, the time to, it really looks really good when they're dropping their 2023 year was just so good, especially compared to 2022. I'm just thinking what's going to like make them gonna increase their profit by another 50%, or, you know, how are they going to have that kind of year? Like what else could they really do that could like make them make way more from banking or something? Like, I don't know. Like if I'm not really seeing like huge growth from them. It's more like steady growth, which isn't bad. It's just, I don't know what's gonna like, it's not like,
Move
okay,
the
they did
needle.
really bad. It's not like, okay, if we were doing this episode in 2022 or maybe 2023, like early 2023, we saw the first report and you're like, wait, if they continue along this trend, they could like increase their profit by 50%, because that's when I think the stock moved from like 30 to like $45 we're talking about now.
Yeah.
But it's just like, what's going to take it to like the $60? Or, I mean, strong, yeah, they continue to drop nice results. I think it'll be like a steady growth. And I think the funny part is, even at $60,
The PE is
if
still...
they continue along this track, they could do, the PE is still pretty low, like 10 times. That's not bad. One of the things I wonder if they would even consider, if they'd ever consider like a share buyback. I noticed that like a lot of companies that don't really want to do, or don't seem to. Let me see how much cash. Because they have a
quite
good
a bit of
amount
cash.
of. Let me see if this is right. Cash resources. I'm seeing
wouldn't they do a share buyback?
171 billion in cash. That's right. Yeah, I'm wondering if they would want to buy some shares.
Yeah, that would be nice. Buy it on the open market.
Yeah.
That would
I
be
think more
kind of wild.
companies. Yeah. Maybe even something like that. I wonder. It'd be nice to ask them,
At the
what they
AGM.
think about something like this. Or even like, I don't know, did they do earnings calls?
Well, I don't think so.
Like a share buyback, even something like that. And then maybe there's even a possibility of them being, if they've, the announcement of them even being taken over. I don't know.
Yeah.
I still think that could.
I think would move the needle still, because...
But say, how do you just buy and then
buy and
hope
believe
for that? I mean, it's
no. I wouldn't buy hoping that they would be taken over.
I wouldn't want that to be the only reason that I buy it. But I mean, there are other reasons I'd say that.
I mean, there are clearly good reasons why people would buy them, and it's not just me. Because whenever I'm buying, I have to think about what are the other people thinking. Why would people sell? Because if the supply is low, and then there's some trigger for people to buy, therefore increase demand and so on. It doesn't have to be the sexiest stock right now, but if it pays good dividends, it continues on this steady growth trajectory and so on, it continues the same level of profitability, and the company itself is doing well, and then somebody says, hey, I just want to kind of take it over too. I mean,
one of the things I could look at,
would come
what
out?
could say, so right now they're on track to do about just in like 19 billion. So say they continue to innovate, grow their banking, said, well, they grow some insurance. Like, what if in a few years, what if like 2-3 years from now, they're doing like 30 billion in profits? What would that look like for the stock you're buying? So you're buying at 45, so 30 billion. How many shares are out there? Hold on.
You're doing some gymnastics, man.
I should probably just drag that down. But yes, I'm just. I guess one of the things when I think about stuff like this, like, okay, some of the same reasons that we're saying about Scotia, that applies to possibly some of like the other financial companies like the NCB and stuff. So then what makes you think that, like, what would make you buy Scotia over NCB? Or what would make you buy NCB over Scotia, if they hit that target, maybe 3 years from now, business is good for them, they grow their loans, arms, whatever, they could be doing, if they did 30 billion in profit, that would be $45. That's like basically PE of 4 to 5. Yeah, that'd be one of the lowest for like a financial company, and they wouldn't have issued any excessive shares or anything.
You don't think financial companies would make a rebound though? Seeing interest rates are falling, I feel like a lot of companies, especially the financial institutions, would make some form of recovery on the equities market, on the stock exchange, just with all of those things that are happening. So even how we're seeing a lot of them trading at lower PEs now, I would see them trading much higher PEs in the next 2 years. So even when you're saying, a PE of 10 for Scotia at 100, if it does $30 billion, would probably be still pretty undervalued at that point in time. So who knows? I guess we'll see how the market shapes up then. But I do like the thought of that. We've always thought Scotia will be taken over at some point. It's just when, if it does happen, you heard it here first on Limitless Podcast. That is it. Guys, if you like that sub, leave a sub to the channel. If you just like hearing us discuss this kind of stuff, speculate, as this is what we do. Sometimes we'll just have random calls and, just talk about things like this where, it's hypothetical, but stranger things have happened. Possible. What do you think, Preston?
You always say one to watch.
One to watch. Yeah, definitely one to watch. And I'll be watching it too, just because it's also, I'm a customer. I should be a shareholder, right? Get those dividends, pay the fees that I'm paying. Guys, thank you so much for joining us on this episode. Please leave a like. Drop in the comments if you guys think Scotia will be taken over, and who do you think would buy them if not GK? All right, we'd love to hear what you have to say. Thank you again. Limitless out.
Peace.